Welcome to the Deep Dive, the show where we really cut through the noise and bring you the most impactful knowledge nuggets directly. Our mission today, to give you a shortcut, really an unparalleled look into how an expert trader dissects the market. We're going beyond the usual headlines, peeling back the layers to see what really drives informed decisions.
Yeah, today we're diving into a pretty remarkable report. It's from top trader Jinlog, someone known for, well, profound market insights, and this unique system they call VPR Rhythm Trading. And this isn't about, chasing hot tips or reacting on impulse to every news flash. No, it's a deeply systematic, disciplined approach. Focuses on market timing and, crucially, risk control. All centered around one company today, Oklo.
Okay, so our goal for this deep dive then is to uncover not just what Jinlog sees, but maybe more importantly, how they see it. We'll be looking at their specific methods, the indicators they trust, the strategic thinking that, well, lets them navigate these volatile markets with such precision. So get ready to really grasp concepts like market rhythm, support and resistance levels, and why timing.
Well, timing isn't just something, is it? It's kind of everything when you're dealing with this much data. This deep dive is really designed to offer you a sort of mental blueprint for disciplined analysis, something you can use way beyond just the stock market. Okay, let's unpack this right from the start then. Who exactly is Jinlog and what's the fundamental principle behind this VPAR Rhythm Trading method? We're talking about a system that seems to actively fight against some common pitfalls, right? Things investors or really anyone making complex decisions might fall into.
Absolutely. Jinlog, as the source material really emphasizes, is seen as a top trader. And this VPA approach is, well, it's foundational to their success. At its heart, VPR is designed to prevent something they call ucha, which, translates pretty directly to overtrading. Now, that might sound simple, but think about today's information overload. We're just constantly bombarded. News, alerts, social media, every little thing. For a lot of people, the instinct is just react immediately to every event, every piece of info. And that often leads to impulsive decisions, right? Burning through capital, burning through mental energy, frankly. The VPR method is really a stark contrast to that kind of reactive, often emotionally driven behavior.
So instead of being caught in that cycle, just jumping on every tweet or earnings whisper, what's the core idea VPR offers? How does it actually steer you away from that trap?
Well, the core idea is to prioritize capturing the overall flow and the timing of the market before you even think about reacting to specific events. Think of it like a skilled surfer. You don't just paddle wildly at the first ripple you spot. No, you read the ocean, you feel the swell, you anticipate the wave's real power, its direction, and then you time your move perfectly. For Jinlog, this translates to identifying SHA. It's a term best understood as key points or maybe inflection points. And these aren't just random price levels, not at all. They are meticulously identified crucial support and resistance levels, places where critical events are rigorously selected for response. You only act, you only commit capital when the market's deeper rhythm, its overall flow, lines up with these really significant technical points. It's about patience and precision.
That sounds incredibly disciplined, almost like a chess master thinking several moves ahead. And it's not just about looking at one stock in isolation, is it? Jinlog seems to operate with a much more holistic view.
Absolutely. The VPR method puts a heavy emphasis on what they call integrated monitoring. It's just not enough to scrutinize only the individual stock, which in this case is Oklo. Jinlog simultaneously monitors the stock itself, sure, but also its performance within its specific sector, and critically, the performance of the broader live market indices. This holistic, multi-layered view provides this powerful confirmation system. It makes sure any trading decision isn't just an isolated high-risk gamble, but a well-informed move that actually acknowledges and leverages the bigger market picture. If you think about it, this kind of multi-variable analysis is exactly what gives you a more robust understanding of complex market dynamics. It moves you beyond simple cause and effect. The ultimate goal, as Jinlog states pretty explicitly, is to control risk effectively while, diligently pursuing profit. Intelligent risk management, every step.
Okay, so for you, the listener, whether you're analyzing stocks, making business decisions, or maybe just trying to make sense of the daily news, why is this VPR framework so powerful? Can you give us maybe a tangible example outside the market where this kind of multi-layered show thinking would be useful?
Oh, definitely. Imagine you're, say, heading up a product development team, launching new software. Instead of just reacting impulsively to the initial sales numbers, which is kind of like the price action of a stock, you're also diligently monitoring, say, the stability of your development pipeline. You're tracking competitor product launches, analyzing shifts in overall user demand, maybe technological trends. Your SAW in that scenario isn't a price level. It might be a critical feedback loop from early adopters that points to a fundamental flaw. Or maybe a sudden shift in data privacy regulations. Those are your crucial key points. That's where you'd rigorously decide, do we pivot our strategy, double down on a winning feature, or maybe even pull back? It offers this disciplined, structured alternative to just impulsive, emotional decision-making, which, let's face it, we all deal with. It's about building a robust decision framework. Kind of like how a seasoned VC wouldn't just look at a startup's pitch deck, right? They look at the team, the competition, the whole economic climate.
That makes perfect sense. Yeah, it's about slowing down, looking at multiple layers, and then acting with intention. Okay, moving on then. What exactly is Oklo, the company at the center of this deep dive? Because this isn't just any company, is it? It's operating in a really fascinating and frankly pretty vital space.
Yeah, it really is. Jinlog's report gives us a very concise but informative definition using several key hashtags. First, it tells us they're deep into hashtag no NOK. That's micronuclear reactors, and hashtag Jinlog, which are small modular reactors, or SMRs. These are really critical terms in the whole evolving landscape of modern energy. Unlike those massive custom-built nuclear plants of the past, the ones built on-site over years and years, SMRs are smaller, more compact, and crucially modular. That means they can potentially be built in factories, standardized, and then deployed where needed. Much more flexibility, potentially faster build times, lower capital costs. Microreactors are an even smaller version, designed for distributed power, offering localized energy.
So essentially next generation nuclear power. What's the big pressing problem these reactors are trying to solve right now?
Oh, a huge one. Hashtag Henny data center power. We're in this era of just unprecedented growth in AI, cloud computing, digital services, everything. Data centers, the buildings housing all that infrastructure, are becoming absolute monsters of energy consumption, just huge. The demand for reliable, consistent, clean power for these places is skyrocketing, and traditional grids often struggle to keep up or provide the kind of resilience needed. Oklo's micronuclear tech offers a potential game changer here, highly reliable, carbon-free, maybe even on-site power for these critical data centers. The report also flags crucial supporting elements like hashtag HALEU, high-assay low-enriched uranium. That's a more concentrated fuel needed for these advanced reactors. And hashtag NRC approval. That refers to the Nuclear Regulatory Commission's rigorous licensing process in the U.S. Mentioning these suggests Oklo isn't just a concept. They're actively engaged in advanced development and that crucial regulatory process, which is a massive hurdle for any nuclear tech.
Right. Okay, let's talk numbers then. Oklo's current market position. The report puts the price at $71.45, and Jinlog lays out this box range for Oklo. What exactly does that mean, this box range, and what are the critical levels inside it?
Okay, the box range is basically Jinlog's identified trading boundaries, a sort of expected corridor for the stock's price action in the near term. The upper bound is precisely set at $79. Now, if the price were to hit, or more importantly, break through that level, it would signal potential for a notable upside. Specifically, the report mentions plus 10.57% from the current price. So $79 is seen as a pretty significant short-term resistance. Getting over it could mean a strong move higher. Conversely, the lower bound of this box is at $65, and this is where the concept of 65U jump, literally defending $65, becomes critically important for Jinlog's analysis.
So if that $65 level doesn't hold, what are the implications? What happens if it breaks?
Right, if the price breaks decisively below $65, Jinlog anticipates a potential 2-month time adjustment. Now, this isn't necessarily a catastrophic crash scenario. It's more like a period where the stock might consolidate, drift sideways, or maybe experience a slower, gradual decline for about 2 months. It signals a loss of that immediate upward momentum, a need for the market to kind of find a new equilibrium. But Jinlog's analysis goes even deeper than that. They introduce critical midterm price levels, specifically $47 to $48. These are explicitly explained as Hulaname, which we can translate as reaccumulation segmented interest zones, and also swing key points.
Okay, reaccumulation zones, swing key points. What do these deeper levels signify for the strategy? Sounds like a much bigger downside risk if $65 breaks, but maybe also an opportunity for longer-term players.
It's exactly right. Those levels, $47, $48, they imply a significant potential downside if that immediate support at $65 fails decisively. We're talking about, roughly negative 34% to negative 32% from the current price noted in the report. But for Jinlog, these aren't just arbitrary downside targets. They're identified as strategic areas, places where, if certain market conditions and fundamental catalysts align, they'd actually consider re-entering or accumulating positions, but in a staged, segmented way. These levels represent crucial longer-term support where structural rebounds might start. so they become attractive for patient midterm capital. It shows a prepared strategy for multiple scenarios, not just the rosy one.
Okay, this is where it gets really interesting for me. With all this detailed understanding of price levels and potential moves, what are Jinlog's actual investment opinions across different time horizons? Short term, swing, midterm. This really shows that sophisticated view of market phases and how to approach each one differently.
Yeah, it's quite nuanced. For the short term, Jinlog's opinion is Jonyo. That translates to conservative neutral, which signals, a posture of extreme caution right now. The underlying reasons given are this convergence of warning signs. In plain English, that basically means the immediate trend is deviating or shifting, the market rhythm is descending or turning down, and the overall supply-demand dynamics are weakening or transitioning unfavorably. So essentially, all the immediate indicators are pointing to a lack of short-term strength. The directive here is very clear. Jondo respond only on the outer rails, which means very cautious engagement. Limiting any actions strictly to the extremes of that price range, like near $65 or $79 words where the risk-reward might be clearer, not risking capital in the choppy, uncertain middle.
Right. Preserve capital when the immediate picture isn't clear. Makes sense. What about the swing trading horizon? A bit longer than short term, but not quite long term yet.
Okay, for the swing horizon, the opinion is simply nah, just neutral. And the nuance here is important. While a bounce from that critical $65 level is seen as possible, if the price does decisively break below it, Jinlog's strategy is to allow for a time-based correction. This implies patience. You don't try to catch a falling knife, you don't chase the price down. Instead, you allow the market time. Time to find its new equilibrium, maybe consolidate or drift sideways for a while, rather than forcing an entry. It really underscores the value of patience, avoiding those premature entries just because you feel like you have to do something.
And finally, the midterm opinion. This is often where the longer-term conviction might lie, especially for a potential growth company like Oklo, right?
It's exactly. For the midterm, Jinlog's stance is Ajo. That's conditional positive. So this is the most optimistic assessment, but, and it's a big but, it comes with a very significant condition. This positive outlook hinges entirely on what Jinlog calls a clear turn signal, specifically at that $47 level. If that signal appears and it's valid and confirmed, then it suggests a potential structural rebound. It indicates Jinlog sees substantial long-term potential, but only if it first reaches and then decisively confirms support at that much lower, more structurally significant price point. It acknowledges strong long-term fundamentals, maybe, but tempers it with the current market realities.
What I find really compelling here is the emphasis on these qualitative factors, things like 79 Tonder Egg, the quality of the pullback after a $79 breakout, and Acho, the recovery of trading quality around $65. Why are these subtle, almost subjective-sounding observations so crucial, beyond just the raw numbers hitting a level?
That's a great point, and it gets to how sophisticated traders analyze things beyond just simple price points. It's not just whether a price level is hit or broken. It's about the context and the quality of the price action right after that event. For instance, if $79 is broken, okay, but the pullback right after is shallow, it quickly bounces back, and it's met with strong buying volume. Well, that suggests powerful underlying buying interest. It confirms the breakout was real. Conversely, if you get what looks like a breakout, but then an immediate deep pullback, that often indicates a fake out or just a lack of genuine conviction from the bigger players. Similarly, that recovery of trading quality around $65, it's not just about the price bouncing, it's about how it bounces. Is there strong, consistent buying volume? Are orders filling efficiently without big gaps? Is there an absence of panic selling right after the bounce? These subtle qualitative observations give you this crucial layer of insight. They confirm whether the market truly accepts these levels as significant points or if the initial move was just noise, vital for filtering out false signals.
That makes so much sense. Yeah, like the difference between someone saying they're committed and actually showing it through their actions.
Yeah.
Okay. Now, how does Jinlog move beyond just these static price points to understand the actual rhythm of the market? That sounds almost like feeling the pulse of the system in real time.
It's a great analogy. Jinlog's VPA system isn't about rigid, static levels. It's about discerning the market's dynamic rhythms, and they analyze these meticulously across different time frames. For the short-term rhythm, it's characterized by that phrase again. Ago jo judo union, meaning the immediate trend is breaking down or shifting, the market's pace is slowing or reversing, and there's a tangible weakening in buying demand versus selling pressure. What's particularly insightful here is Jinlog's specific warning about Judy distortion that frequently happens in the 1-3 trading days right around major news events, earnings, permits, partnerships. This means those immediate price moves around headlines are often unreliable, driven by hype, emotion. They can easily lead to overtrading or getting whipsawed. Jinlog's rhythm analysis helps filter out that temporary noise.
So news creates noise, and understanding the rhythm helps filter that to see the real underlying movement. Okay. What about the swing rhythm, that slightly longer period?
The swing rhythm is described as, okay, okay, yeah, oh. So here the underlying trend isn't necessarily collapsing, but it's clearly slowing down, entering maybe a consolidation or adjustment phase. The pace, the rhythm, is still descending, and supply-demand remains weak. Jinlog's explicit recommendation in this scenario: avoid chasing price in the Jungan-Gay, the middle of that established price box, until the $65 reason support is decisively confirmed. This just reiterates that core VPAR principle: patience. Wait for clear confirmed signals at those crucial those key points. Don't get caught in the choppy, uncertain middle where the risk is higher and the reward less defined.
Got it. And for the midterm rhythm, how is that currently playing out for Oklo? What does Jinlog see there?
The midterm rhythm. This is interesting. It's currently characterized by you're in Jane. Now that might sound a bit contradictory, right? Trend acceleration maintenance, but rhythm descending transition. What it implies is that while the longer-term underlying trend for Oklo may be based on its fundamental potential, might still be seen as generally upward, it's currently experiencing a significant internal pullback, a slowing in its pace and its momentum. It's not accelerating right now, even if the big picture narrative might suggest it should be. And Jinlog identifies critical IA triggers for this midterm rhythm to really recover and reaccelerate. These are specific licensing milestones from the NRC and securing those large-scale power contracts. Those are the fundamental catalysts that could properly reignite the midterm upward rhythm.
Okay, so beyond these qualitative rhythm observations, what are the concrete technical tools Jinlog uses to confirm these rhythms, to provide that hard data? Because combining that feel for the market with objective, measurable indicators, that seems to be what makes this approach so robust.
Absolutely. The report details several key technical indicators and their precise roles. First up, RSI, Relative Strength Index. Jinlog highlights how its recovery above the 50 line significantly enhances the reliability of a potential bullish signal. RSI measures the speed and change of price moves. It tells you if stock is overbought or oversold. A move above 50 generally signifies that bullish momentum is gaining strength relative to bearish momentum.
Yeah.
It acts as a critical confirmation point. It's not just some random line. It's a widely recognized point where the balance of power often shifts.
Right. And what about MACD? That's another really common one. How does Jinlog use that specifically?
MACD, moving average convergence divergence. Yeah, it's crucial for Jinlog, particularly the importance of its signal line crossing upwards. MACD shows the relationship between two moving averages of the price, indicating momentum and potential trend changes. When that faster MACD line crosses above its slower signal line, it's often seen as a bullish signal, indicates short-term momentum is picking up relative to longer-term momentum. For Jinlog, this upward cross adds significant weight, real conviction to the rhythm analysis, suggests a building wave of buying pressure.
Okay. And finally, BW. What's the significance there, and why those specific parameters like 8-1-10-0Z and 40-60-90? That sounds very precise.
BW almost certainly refers to Bollinger Bandwidth. Bollinger Bands are that volatility envelope, right? Standard deviations plotted above and below a moving average. The bandwidth specifically measures the distance between the upper and lower bands, basically tells you how volatile things are. Jinlog explains that when multiple expansions appear, it signals trend reacceleration. Now, those specific parameters, imagine calculating Bollinger Bands over different time periods, say 8, 12, and 18 periods for shorter-term volatility reads, and then 40, 60, and 90 periods for longer-term reads. When these different calculations of volatility all expand simultaneously, it's like a symphony of signals saying, hold on, a very powerful, sustained trend is building or resuming here. It confirms the trend isn't just a quick blip, but the broad, robust force across multiple time horizons. It's a strong confirmation.
Wow. So when you combine that almost intuitive feel of the market's rhythm with the hard data from RSI, MACD, and this multi-period BW, what does it all mean for Jinlog's approach? It sounds like a really powerful mix of qualitative and quantitative, guiding those very precise actions.
Yeah, what really stands out is that Jinlog isn't using these indicators in isolation. They're not just hoping one signal is right. They're using them to confirm and validate the qualitative rhythm analysis. So if the short-term rhythm looks like it's breaking down, But then you see RSI starting to recover above 50, the MACD signal line crossing up, and the Bollinger Bandwidth expanding. It's like multiple instruments hitting the same note perfectly. This confluence of signals dramatically increases the confidence in a potential turn or a strong trend continuation. It's about building this multi-layered, highly validated case for action, rather than just relying on one data point that might be a false alarm. This integrated, cross-confirming approach is what allows for that real insight into the market's pulse, minimizing false signals, maximizing the probability of getting the timing right.
Okay, let's shift gears slightly. Beyond the charts and rhythms, what about the fundamental health of Oklo itself? According to Jinlog's report, it seems vital to understand the company's actual financial footing, especially for a company in such a new, capital-intensive industry.
Right, and Jinlog provides a clear picture of Oklo's hodilai, their financial flow. The report explicitly confirms that their combined cash, cash equivalents, and marketable securities are at a sufficient level. It effectively secures the company's development stage runway, which for a pre-commercial company like Oklo is incredibly important. It means they have the capital needed to keep pushing forward with research, development, licensing, without immediate worries about liquidity or having to rush into maybe desperate fundraising, which could be bad for shareholders.
So they have enough cash for now, but are they profitable yet, making money?
No, the report notes a continued deficit in the first half of the year. But this is entirely expected, frankly, quite normal for a company in its development phase, especially one in a sector like nuclear energy, capital-intensive, highly regulated. Jinlog explains their funds are meticulously focused on the crucial stuff: extensive R&D, navigating those complex licensing processes, and critically securing their supply chain. That includes both that specialized HALEU fuel and establishing robust manufacturing capabilities. This focused spending aligns perfectly with the company systematically building towards eventual commercial operation.
Okay, so how are they funding all this if they're still in deficit? Is it all from going public?
Well, the funding strategy, as Jinlog outlines it, involves capital raising through UL or sequential execution based on specific project stages. So they're not raising all the money at once in one huge round. Instead, they acquire capital in phases, as specific milestones are met or as needs arise for different defined project stages. It's a measured approach, aligning funding with actual progress. Crucially, though, the report directly addresses the inherent #dilution possibility. When a company issues new shares to raise capital, it can dilute the value of existing shares, right, by increasing the total number out there. Jinlog stresses the importance of monitoring government and private partnerships alongside this, because those can be vital sources of funding or strategic support too. They might lessen the need for extensive dilution or provide that external validation for the tech.
Sounds like a delicate balancing act for any company at this stage.
Yeah.
Okay, beyond the internal financials, what major external events or looming risks does Jinlog highlight? Things that could really impact Oklo's path.
Jinlog meticulously details a comprehensive Rugoyan news risk events section. First, and maybe most critical, is licensing. The Nuclear Regulatory Commission, NRC, approval processes, securing site approvals, achieving design milestones. These are absolutely paramount. These regulatory green lights for Jinlog form what they call the Oklo Yugonon, the midterm valuation axis. Without these approvals, commercialization just can't happen, so significant long-term value can't be realized. It's the ultimate gatekeeper.
Right, regulatory hurdles are massive. What about the demand side? Do they have customers lined up?
That leads directly to the next point: business partnerships. Alliances with major data center power and cooling infrastructure companies, and also established energy companies, are highlighted as key to strengthening demand visibility. If Oklo can lock in tangible agreements with big players in these sectors, it provides concrete proof of future revenue streams, market adoption. It moves them from just promising tech to a commercial reality.
And on the supply side, we mentioned they need specialized fuel. What's important there?
Yeah, for fuel manufacturing, the expansion of #ALE procurement, getting enough of that fuel and establishing robust manufacturing partner lines. These will directly dictate the speed of their transition to commissioning, and ultimately commercial operation. Access to ALEU is a known bottleneck for advanced reactors, and the ability to efficiently produce their microreactors is essential for scaling up. If either of those areas faces significant delays, it directly impacts their commercialization timeline and, by extension, their valuation.
What are the sort of overarching, always present risks that Jinlog flags? Given Oklo is pre-commercial in this sensitive industry, I imagine there are some big ones.
You're absolutely right. Jinlog emphasizes that since Oklo is still pre-commercial, several ever-present risks loom large. These include potential regulatory delays, obviously, The possibility of cash depletion if funding doesn't quite align with project needs or timelines stretch out, and that ongoing risk of dilution from future capital raises. These are kind of the perennial challenges for any innovative early-stage company, especially in a heavily regulated, capital-intensive field like nuclear. Jinlog really stresses the crucial importance of constantly monitoring the event calendar. These risks aren't static. They evolve dynamically with every milestone hit or missed. It's a continuous watch.
Yeah, this section really shows how Jinlog meticulously weaves together both the micro-level financial details and that macro-level industry and regulatory landscape. It's not just a list of facts, it's a truly comprehensive, interconnected view.
And what's really compelling is how these fundamental factors, the financial, the external events, they aren't treated separately. They're seamlessly integrated back into the market rhythm and technical analysis we discussed. For instance, a delay in NRC approval, a key risk, could directly impact those midterm rhythm recovery triggers. Or a major partnership announcement could fundamentally shift that long-term valuation axis. This comprehensive approach just underscores a vital truth. Market moves are the result of this complex interplay. Company health, external catalysts, investor sentiment. All these forces are reflected and therefore detectable in the price action and the market rhythm if you know how to look.
Okay, now for the real core of the actionable advice. How does Jinlog translate all this intricate analysis into specific trading strategies? What are the strategy scenarios they lay out? This is really where the rubber meets the road, isn't it? Moving from diagnosis to a concrete game plan.
Yes, and this is where Jinlog's disciplined approach truly shines, offering distinct conditional strategies for different time horizons. Let's start with the short-term buy strategy. The entry point is quite precise. 65 peso iaugaja upon a rapid rebound near $65. And it's not just any bounce. It has to be rapid, decisive, and coupled with, improved execution strength and distribution of execution prices. What that means is it's not just the price bouncing, but bouncing with conviction. You'd want to see large orders filling quickly, prices confidently pushing higher without hesitation, indicating strong institutional or smart money buying, not just small, hesitant retail nibbles. It also implies a segmented approach, buying in portions, not going all in at once.
So seeing true conviction from buyers at that critical $65 level, what specific conditions beyond just the price action have to be met for Jinlog to actually pull the trigger on this short-term buy? Sounds like multiple layers of confirmation.
Oh, absolutely. It's a multi-layered validation process. It requires TRAP GAY 23 nullis over 2/3 resolution of TRAP. That's trading range activity pattern. Think of it like a spring coiling up before a big move. Before a significant breakout up or down, the market often tightens, volatility drops within a narrow range. TRAP's resolution means that coiled spring has sprung, signaling a clear directional move is emerging. Jinlog looks for over 23 resolution, suggesting strong conviction behind it. Additionally, rhythm contraction transitioning to re-expansion is needed, meaning the choppy, unpredictable rhythm first tightens up, then clearly starts expanding in a definite direction again. And finally, a crucial condition. TRA, confirmation of index and sector alignment. That's the integrated monitoring we talked about. The stock's move needs support from the broader market and its sector. Avoids those isolated high-risk trades against the overall market tide.
Okay, once you're in, how do you manage or exit this short-term trade? What's the plan for taking profits and managing the risk?
For short-term management, Jinlog advises 76.79 jone, segmented liquidation in the $76-$79 range. So selling off portions of the position incrementally as the price approaches that upper resistance boundary, systematically taking profits off the table. And re-entry, only attempted on the first pullback after a clean, confirmed $79 breakout. This ensures that if a new, higher trend is genuinely forming, you can re-engage, but add a potentially higher quality entry point after that initial confirmation.
Okay, next up, the swing buy strategy. How does this differ from the short-term approach, both in entry points and the conditions needed?
Right, the swing strategy has distinct entry points and conditions, reflecting its slightly longer time frame. The first potential entry is 65 jara Wenren-sho, first segmented entry upon confirmation of resupport at $65, and that level remains critical. However, if $65 is breached decisively, then a 2-2-2 a second segmented entry is considered down at that deeper $48-$47 level. The Chasagren-sho, the key points midterm supply zone. This shows that prepared, multi-stage strategy again, ready for both immediate resupport and a potentially deeper pullback, allowing for methodical accumulation.
And the specific technical conditions for a swing buy, are they different indicators or maybe a different combination?
They are different.
This swing strategy also requires that TREPI 2323 TREPI resolution, like the short-term one, but it demands additional specific indicator confirmations simultaneously. RSI 50O DREC. RSI returning above 50, meaning momentum is decisively shifting back bullish. And MACD Faradiva, the MACD histogram turning positive. The histogram turning positive is a strong signal that bullish momentum is actively accelerating. It adds significant conviction. The simultaneous confirmation from these three, TREPI, RSI above 50, positive MACD histogram that's key for Jinlog here.
And managing the swing trade once you're in, what's the exit plan look like? For exit and management, Jinlog advises to 79 2K uglier. I don't mean raise some profit during the test of that $79 upper band. Again, taking some money off the table at known resistance. Importantly, if the market rhythm shifts decisively into agree time adjustment, like that potential 2-month consolidation we discussed, the advice is to reduce exposure. This indicates a proactive move. Step back from the position if it enters a prolonged period of chop or sideways drift, frees up capital for potentially better opportunities elsewhere. Okay, finally, let's look at the midterm buy strategy. This sounds like the longest term play, reflecting maybe Jinlog's deeper conviction if the conditions are met.
It is indeed the longer-term strategy. The entry point is specifically defined. 47-yard area on U at the $47 midterm entry zone. But this entry is highly contingent on crucial confirmations. GRESEC has shown a recovery of institutional supply demand and normalization of trading volume. This is vital. Significant institutional involvement often signals longer-term belief, deeper pockets entering, and normalized volume indicates healthy, sustainable market participation, not just speculative spikes. This strategy also allows for giant stage segmented execution, spreading buys over time and price.
And the conditions for this midterm entry sound even more rigorous. What's required here?
Yeah, this demands the most rigorous confirmation. It requires Chund multi-time frame key point alignment, meaning that $47 level must be a significant confirmed key point across multiple timescales, from short-term charts all the way up to long-term monthly views, real structural significance. And critically, BW8 to 1846 Almighty John, that simultaneous expansion of Bollinger bandwidth across all those specific parameters. As we discussed, this indicates extremely strong trend confirmation across different volatility calculations, suggesting a robust underlying trend isn't just starting, but entering a powerful sustained phase. These specific bandwidth parameters imply a very detailed, probably proprietary setup for identifying strong trends, ensures deep conviction before a long-term commitment.
And how is the target price managed for such a long-term strategy? It doesn't feel like it would just be a fixed number you set and forget.
You're exactly right. It's not fixed. For the midterm, the directive is go. The target price is managed as undetermined until the upper band is redefined. This highlights a dynamic, adaptive approach. The initial target isn't static. Instead, the upper band is adjusted upwards, only upon confirmed rhythm recovery and the achievement of those critical permit milestones we talked about earlier. This aligns the financial target with actual company progress and market validation. It's an evolving, responsive strategy, not a rigid prediction.
This level of detail is, well, it's impressive. But for someone newer to this, it might feel a bit overwhelming. How does a trader avoid just getting stuck in analysis paralysis with so many conditions? And does Jinlog ever simplify, or is this full granularity always the expectation? What really stands out to you when you hear these incredibly detailed conditional strategies?
That's an excellent question, and it points to the difference between having a framework and applying it in real time. What's truly remarkable here is the sheer granularity, right? The explicit multi-layered conditions for each phase of a trade. It's not just buy at $65. It's buy at $65 if execution strength improves, if TREPI resolves, if rhythm re-expands, and if the sector and index align. This layered validation dramatically reduces the subjective guesswork in trading, replaces it with a rule-based, more objective approach. Now, to avoid analysis paralysis, it implies these conditions are likely automated to some extent, or for a human trader, they become part of a deeply internalized checklist through practice and experience. Jinlog's method, as presented here, emphasizes that this full granularity is the standard for high-conviction trades. It filters out the weaker, less certain signals. What stands out to me? It's the antithesis of guessing. It's a testament to critical thinking applied rigorously to market analysis. It shows how you can systematically break down a complex decision into manageable, verifiable steps. It really elevates trading from speculation towards a disciplined, almost scientific craft.
Okay, Jinlog goes even deeper, bringing in more advanced analytical tools beyond just the basic price and volume we've covered. let's look at their Elliott wave analysis. For anyone unfamiliar, Elliott wave is a method, maybe a theory, of predicting market movements by identifying these repeating wave patterns, often thought to be driven by shifts in collective investor psychology.
That's right. Elliott wave theory posits that market prices move in these predictable patterns, or waves, driven by shifts in mass psychology, investor sentiment. And Jinlog applies this fascinating theory to OKO across each time frame. For the short term, the VOGO, the basic assumption is in 2-go. That's an extended two-wave correction possibility. In Elliott wave terms, a two-wave is typically a corrective phase, a pullback, after an initial impulse wave, wave 1. So this means Jinlog is anticipating, or at least allowing for, a potentially prolonged period of consolidation or downward movement right now. However, a transition to the beginning of a three-wave is explicitly looked for if that critical $65 level is defended and trading quality recovers. Now, a three-wave is traditionally considered the strongest, longest impulse wave in an Elliott sequence. So confirming that transition would signal a potentially significant, powerful upward move, shifting the short-term outlook dramatically.
So holding $65 is absolutely key for short-term reversal, even according to Elliott wave. What about the swing perspective? What does the wave count suggest might happen there?
Okay, for the swing time frame, a three-value on, the condition for a three-wave progression is deemed met if $65 resupports and the Mashidi re-expands. Notice again how it critically links the abstract Elliott wave pattern to concrete, measurable technical indicators. It's not just wave counting in isolation. If these conditions, this confluence of signals are not met, then a two-wave extended correction is considered down at the $48, $47 levels. This implies a deeper, more prolonged corrective phase, potentially taking the price down to that lower key point area we discussed earlier. It's really a scenario planning approach, using wave theory to anticipate both the optimistic path and the more cautious, deeper correction path.
In the midterm Elliott wave analysis, what's the potential long-term path for Oklo look like from this perspective?
The midterm analysis suggests a return to a 8-13 concha. A midterm 1-3 wave extended path is possible. This refers to a particularly strong, sustained upward trend, often signifying the most powerful and extended phase of a major bullish market cycle. Very optimistic. However, this highly positive scenario is contingent on very specific conditions being met. It requires those key fundamental catalysts, licensing milestones, the HALU fuel chain security, and large demand contracts to all be synchronized. Jinlog articulates this as Kaloa confirming event synchronization. This really demonstrates how even an abstract theory like Elliott wave is grounded by Jinlog in tangible, real-world company progress and catalysts. It makes the grand narrative of the waves practical and actionable.
It's fascinating how Jinlog weaves the technical, the fundamental, and now even these wave theories together. But what about that less tangible yet incredibly powerful element, collective market sentiment? How does Jinlog factor in a T community flow into their analysis? That must be tricky to quantify.
Yeah, this is a particularly insightful aspect, acknowledging that markets aren't purely rational machines, right? They're significantly driven by collective psychology, public perception, narratives. Jinlog meticulously identifies specific keywords that contribute to this sentiment. On the positive side, phrases like NRCCOL, referencing reactor licensing progress, AE for fuel supply breakthroughs, COLO-T signaling new data center power contracts, and Aurora, which is Oklo's specific reactor design. These are consistently seen as strengthening the growth narrative when they gain traction in online discussions, news, etc. These are the positive buzzwords that get the community excited about Oklo's potential.
And on the flip side, what are the persistent negative sentiments or risk keywords that they keep an eye on?
On the negative side, Jinlog highlights these persistent dilistio risk keywords that generate ongoing concern. Dilution from stock offerings, delays in development or approvals, and uncertainty around the timing of actually reaching commercial operation. These are the recurring anxieties that can definitely weigh on investor confidence. Crucially, Jinlog issues a strong warning about MIGA execution distortion that frequently occurs 24 to 72 hours after sharp increases in influencer mentions or media coverage. Basically, when the stock gets hyped or goes viral, the market often becomes less rational. You get erratic price moves that might not reflect true value. The strategy advised during such periods: separate offense and defense only at the outer boundaries of the price box, $65 and $79, meaning be aggressive maybe at obvious, establish support or resistance during hype periods, but otherwise be defensive. Avoid that emotional, volatile middle ground where you can get chopped up.
Okay, finally, let's peek into the really granular details of market mechanics. The WULADU, the in-depth report on supply and demand. This truly gets into the weeds of how money is actually moving in the market. How does Jinlog analyze the actual flow of orders?
Yeah, this delves right into the heart of market dynamics, understanding the actual movement of capital. First, there's Ashgaard's show, quantitative supply-demand. Jinlog observes that the execution distribution, meaning where trades are actually being filled, tends to concentrate at the upper and lower outer rails of that box range, especially around key events. This suggests a systematic execution pattern. Sophisticated players or larger funds are methodically acting at these crucial price extremes, $65, $79, rather than just trading randomly in the middle. It shows strategic positioning.
And what about AI? AI supply demand? That sounds like it's leveraging some pretty cutting-edge tech analysis.
It certainly sounds like it. Jinlog notes that when news focuses on that compelling data center power theme, trend-following behavior in the market becomes significantly faster. This is very likely due to algorithmic trading programs, AI, picking up on these strong narratives and executing trades with incredible speed, much faster than a human could react. Jinlog's strategy here is to absorb volatility in 3 distinct stages. Breakthrough, pullback, re-expansion. This means they're prepared to enter during initial breakouts, potentially add to positions during subsequent healthy pullbacks, and then maybe buy again as the trend re-accelerates. It's a way to effectively capitalize on the speed of these AI-driven trends while still meticulously managing risk through those staged entries.
And finally, how does institutional money play into this? The institutional supply demand. These are the big players, the ones who can really move markets.
Right. As institutional involvement expands, maybe post-listing or as the company matures, Jinlog observes that large block trades and algorithmic executions increase. These are the hallmarks of sophisticated, large-scale trading operations getting involved. The confirmation points for Jinlog here are distinct. Improved, trading quality improvement, and candle body recovery. Trading quality improvement means transactions are happening smoothly, efficiently, without big price distortions or gaps. Indicates good liquidity and conviction. Candle body recovery. Think about a candlestick chart. The body is the range between the open and closed price. A large, strong candle body recovery after a dip tells you buyers confidently push the price up from its lows. Signals a robust rebound backed by significant capital, not just a weak bounce. These are the telltale signs that institutional money is truly flowing in, validating the price moves.
Wow. This level of meticulous detail really shows a holistic, incredibly sophisticated approach to market analysis. It feels like no stone is left unturned. It's about connecting every single data point, isn't it? From the broadest market rhythm all the way down to the most granular order flow to form one complete picture.
It's truly compelling, seeing how all these diverse layers, from the broad, almost philosophical Elliot waves down to the very specific real-time AI and institutional order flow, how they all converge to inform Jinlog's precise strategies. It's not about relying on just one indicator or one piece of news. It's about confirming hypotheses across multiple, sometimes seemingly unrelated analytical frameworks. It reinforces this idea of comprehensive intelligence gathering and pattern recognition, which is just an immensely powerful skill, whether you're analyzing a stock, a complex business problem, or even, say, a medical diagnosis. This is really what advanced critical thinking applied to vast amounts of information looks like in practice.
Well, we've certainly navigated a complex but incredibly insightful deep dive into how top trader Jinlog systematically analyzes OKO. From understanding those market rhythms to dissecting granular order flow, we've really witnessed a masterclass in disciplined analysis today.
Yeah, and the key takeaway here isn't just about Oklo specifically. It's the framework. It's the profound importance of identifying those crucial key points and then rigorously integrating all these diverse data points, fundamentals, news, technicals like RSI and Man-ED, even community sentiment, all feeding into precise rule-based strategies. This approach really shows how to build a high-conviction understanding from just a mountain of information.
So what does this all mean for you, the listener, maybe beyond the world of trading? This deep dive really provides a powerful blueprint for approaching any complex information you might encounter. It's about developing a structured way of thinking, learning to connect seemingly disparate pieces of information, understanding the interplay of different forces. Imagine, for instance, you're trying to understand a new complex policy proposal. Instead of just reading the headline, you could apply this framework, right? Identify the critical inflection points of its impact. Consider its rhythm, its long-term effects. Track community flow, public sentiment around it. Analyze the financial flow, the economic impact. It's how you move from just knowing surface facts to truly understanding a subject, allowing you to sift through all the noise and identify the core signals that actually matter.
Exactly. This analytical approach we've explored today, it champions critical thinking and sophisticated pattern recognition. It's a powerful tool that, honestly, regardless of your professional field or personal interest, can help you cut through the information overload, gain a far deeper, more valuable understanding of the world around you, allowing you to anticipate and respond with, well, greater precision and confidence.
Thank you so much for joining us on this deep dive. Keep learning, keep exploring, and we'll be back soon with another stack of sources to unpack.
And just a reminder, as the source material itself notes, this analysis provides a detailed analytical framework. All investment decisions and the responsibilities that come with them ultimately rest with the individual investor.